I'm Liz Spencer, and welcome to Business Connection, introducing you to the names and faces of Naperville area entrepreneurs and business owners. As we wrap up 2020, we are joined by BG Advisors CPA, NorthStar Wealth Group, and Nagle, Obarski, and Holzhauer PC to talk about the end of the year planning for your business. All here on Business Connection. Welcome to Business Connection. I'm Liz Spencer. Joining me today is a great team of experts to help us sort out all the end-of-year business considerations. On this show today are Gandhi of BG Advisors CPA, Gabriel Chavez, Private Wealth Advisor with NorthStar Wealth Group, and Ian Holzhauer of Nagle, Obarski, and Holzhauer PC. So welcome, everybody. This is quite the team of experts. So everybody, what I'd like to do is have each one of you give us a little bit of a background of what you do and how you help us both at the year end and throughout the year. So Ian, let's start with you.
Sure. My name is Ian Holzhauer. I'm a partner at Nagle, Obarski, and Holzhauer. Our law firm focuses on helping small businesses, especially in the Naperville area, in what we call transactional work. And kind of in English, that's helping them with contracts, helping with planning business succession, helping families figure out how to move their business to the next generation. Also, on the individual side, we help people with estate planning matters, planning for how to move their wealth to the next generation. The one thing we don't do is litigation. Don't sue anybody. It's all kind of peaceful in our world.
That's wonderful. Sachin, how about you?
My name is Sachin Gandhi. I'm with BG Advisors CPA. We are a forward-looking CPA firm. That is, we work with our clients on a regular basis and work during the year, how the year is going, how can we adjust rather than going in rear and adjusting it. We are a full-service accounting firm, so we do audit, accounting, payroll, tax, CFO service, and any transaction work.
Awesome. And Gabriel, why don't you round us out?
Appreciate it, Liz. So as Liz mentioned, my name is Gabriel Chavez. I'm a private wealth advisor with Ameriprise Financial. We have our own practice at NorthStar Wealth Group. And what we do is that we work with small business owners and individuals and help coordinate a lot of the investments and a lot of the plans that they will need in order to plan for the future. We do a lot of financial planning for individuals and also help coordinate with the investments.
That's great. Now, Sachin, you really are the catalyst to get this great team together. Why is it important when you think of end-of-year business, or actually, why is it important for a business to think of about having a strong team of advisors, such as yourself, Ian and Gabriel?
So most of my career I spent with Big Four accounting firms and then Fortune 500 company. And when you think about those firms, they have in-house experts, like they will have an in-house counsel, they'll have a treasurer, they'll have the FP&A team. Small and mid-sized business owners, they don't have that resources, and they have to go out and individually hire those contacts. Now, if we are not working with each other and just working in silos, it becomes very difficult for the business owner to kind of relay the same information over and over 2, 3, or 4, or they're all their trusted advisors. Versus when we work in a team approach, we can coordinate directly with each other, helping the business owner achieve the goals that they have set for themselves.
Well, I think you said something very important there, helping the business owner, because the business owner, whether you're a restaurateur or you're a manufacturer or you're anything else, we're focused on the business. And oftentimes that's where our passion is, and we need someone like you and Gabriel and Ian to help us get that back end to work and bring us forward. So let's talk a little bit about why it's so important to think about your business, and especially at the end of the year. Tell me a little bit about what we should be thinking about, and then we'll talk about why has this year been so different. So first off, what do we need to be thinking about?
this is kind of a unique year from every way we can think about. A lot of business owners, when I talk to them, they are thinking that they are going to have a taxable loss maybe because they were off for 3 months and then they got back in. The thing that we should be thinking about right now is how to treat the PPP loan. Mm-hmm. A lot of people are thinking that, since they have not filled out the application for forgiveness, it would be a 2021 income. So you have to take that into consideration, how it's going to affect this year. IRS recently issued a guidance that if you reasonably believe that your PPP loan will be forgiven, then you should include that as income for 2020. Now, that changes a lot of things. When you include that, how does your tax year look? And what you need to do in this month to mitigate those situations. Do you need to buy any fixed asset this year or things like that you have to plan for right now?
And correct me if I'm wrong, Sachin, but because of the PPP, lots of things it's very different for the employer and what they can take as tax claims and with their employees that make this year very, very different, as you pointed out, than any other year. So thus, maybe consulting with a tax expert or an accountant is even much more important this year than ever before.
That's correct. And a lot of questions also come around the employment law perspective, that what happens when my employee is sick and we are paying for that. And that's when, I would just advise them to consult with their legal counsel about this kind of issues, that how to handle those kind of scenarios.
Very much. So, Gabriel or Ian, from your point of view, how is the 2020 year different than ever, and what should we be thinking about?
Just to briefly dovetail off of what Sachin was talking about, I remember back in April when all of this regulatory guidance came down about employment law and what posters you had to have up in your office about, what happens if you get sick and what kind of compensation you have to offer to people who were sick with COVID or were afraid that they might be sick with COVID. And it was changing literally by the day. And a lot of times we were scrambling to keep up with all of it too. So thankfully things have gotten a little bit slower now. Hopefully we don't have some kind of emergency like that again, although cases are surging. But I would just say a lot of times that stuff is day to day. Even the information that was valid a week ago, if you have a new employee get sick or something like that, it's good to check in.
I think one of the items that's going to be critical for a lot of people, as Sachin mentioned, there's going to be a lot of income tax ramifications from items like the PPP from this year. And so it really gives business owners an opportunity to take advantage of potentially higher tax years in doing things like increasing retirement plan contributions, accelerating charitable giving, recognizing capital losses, and looking at new retirement benefits. And if we're expecting to have a lower taxable year, doing things like accelerating income to do things like Roth conversions or defer charitable giving until next year, delaying pass-through business expenses and recognizing capital gains. So there's a lot of different strategies you can look at. In addition, what 2020 brought through the CARES Act was the ability for those individuals that are really struggling to free up capital from their retirement accounts by taking a distribution up to $100,000 and then being able to spread the taxation over the next 3 years. So there's a lot of resources available, and it's certainly something that you should talk to, or individual business owners should talk to their tax professional about.
Right. I think there's a lot more that can be done at the year end to help mitigate some of those taxes than you think. But it's someone like yourself and Sachin and Ian who can help you think outside the box a little bit, if you would. So when we're talking about charitable giving or a sale of a business, let's talk a little bit about the end of year things with that.
So I would say those are two items where it's very common for the end of the year to be the time where people decide to make those decisions. I'll also add another one, which is gifting within the family. So each year you can give $15,000 per year, per donor, per donee. So husband and wife can each give $15,000 a year to, let's say, their child, or put it in a 529 plan for their grandchild. All of that has big estate planning, estate tax ramifications. And a lot of times people want to wait till the end of the year to figure out how to best plan, and they'll know what happened in the year at the end of the year. Charitable gifting, there were changes this year because of the CARES Act into how the charitable deductions will work this year. That's a great thing to talk to your financial advisor about. Don't have to call me. Gabe or Sachin would be much better versed in that than I would. But all this stuff, people kind of realize, holy cow, it's the middle of December and I haven't gotten to it, and I have a couple of weeks left, and then those opportunities are gone. You can't go 2 years from now. You can't say, well, I want to claim a 2020 gift to my family or a charitable gift. That opportunity goes on 12/31.
So till last year, there was a limit on how much charitable contribution you can make. That was 60% of your AGI. Under CARES Act, that limit is gone. So you can contribute up to your AGI in 2020. So this gives a lot of opportunity for people who want to contribute to charitable causes. The only caveat to this is that donor advisory funds are not included in this definition. So if you are planning to give it to a donor advisory fund, still the 60% limit applies. So something to consider before year end if you are making any charitable contribution.
A sale of a business, how does that impact at the year end? What do we have to be thinking about if we're going to sell that business?
It's kind of an important time actually from a sale of business perspective, because a lot of people due to COVID, they thought that this is the time that they should sell their business. So we are seeing a lot of movement there, and also the interest rates are pretty low. That is attracting a lot of new buyers to come into the play. Right now, the capital gain tax rate were maxed out at 20%. So a lot of people were trying to get that gain in 2020 or before. Due to the change in administration that's going to happen, I think in the future, the thing that'll have a lot of importance is going to be installment sale, because then you can defer the gain for a number of years and be in a lower tax bracket for whatever the period is, like 5 years or 10 years installment sale. Then you would trigger the gain in 10 years instead of just 1 year.
Good information to have. We are going to continue the conversation, but first we're going to take a short break. We'll be right back with more Business Connection. Stay tuned.
As we close out 2020, now more than ever, Naperville Community Television needs your gift of financial support. Television in its very nature brings people together, and NCTV 17 does that for this city in so many ways. Not just on traditional TV, but on all our platforms to reach as many people as we can with our stories. Stories that matter. By sharing stories, big and small, we foster connection. We're not just another television channel. We are a platform that nurtures the very connection that makes us human through effective video storytelling and relevant conversation. And a more connected city is a stronger, better community for everyone. So during this time of giving, please make a donation to Naperville Community Television at nctv17.com/donate. Your gift directly supports our mission of telling local stories on air and online.
Welcome back to Business Connection. Joining me again is Sachin Gandhi from BG Advisors CPA, Gabriel Chavez from Private Wealth Advisors with NorthStar Wealth Group, and Ian Holzhauer of Nagle, Obarski, Holzhauer PC. So what a great group. So we wrapped up with the sale of a business in the first segment. And so let's talk about sale of property.
So one thing to keep in mind is that in this environment, with interest rates being as low as they are right now, there's actually a lot of unique opportunities out there for buyers to be able to pay for a purchase of a business or a property in a lump sum fashion. And for individuals specifically that are selling property, there are strategies out there that allow you to be able to defer taxation of that sale. I think, Ian, you wanted to talk a little bit about some of those strategies.
Sure. So one of the most popular ones is if a client comes to me and says, hey, I'm selling a big commercial piece of real estate, like a factory that's been in my family for a long time, and they're interested in investing in something else. There's a way where they can sell the property and not take capital gains tax on the proceeds from that sale if that money is reinvested in another piece of real estate within a certain period of time. It's called a 1031 exchange. There's a lot of complex technical rules about how it has to be done. But the bottom line is if you talk to your attorney, your accountant, your financial advisor about it, they can help you get it done and save a ton of money on taxes. Another very interesting thing that's out there is the opportunity to invest in zones that have been marked by the government as kind of economically disadvantaged. And that may be something that maybe is beyond your skill set. You may have a hard time identifying properties like that. But if you talk to your financial advisors, they may be aware of opportunities for you to invest in perhaps real estate funds that purchase those types of properties where you can get the benefit of professional advice in helping you identify those properties and the tax benefits we've just been talking about.
In our pre-chat, you all had mentioned that these special zones are all over the place. I think most people might think that that might be farther away, but there are these opportunity zones right here in DuPage County. Am I correct?
That is correct, yeah. There are opportunity zones everywhere. Like there are some opportunity zone in as close as Addison, Aurora. You can look at the map that is issued by the federal government and you can see there are a number of opportunity zones. So if somebody wants to manage the property by themselves, then they would buy a real estate in those zones. And the compliance is pretty straightforward, actually. You have to meet certain criteria, and then you can qualify your real estate fund as a qualified opportunity zone fund. Sometimes, as Gabriel mentioned, that people do not want to manage the property, and that's where they want to invest in a fund which is already established. So they are a passive investor in that instance, and that's also a good strategy because then you can diversify. You can invest in multiple opportunity zones through that vehicle, and I think that's where Gabriel can help you find the right kind of fund, which meets the criteria that you're looking for.
A lot of unique opportunities. And for individuals that are looking to exit from investing in real estate, there's also other strategies that can actually defer taxation. One item of note is utilizing strategies like a cash balance plan. So a lot of people think that the maximum they can contribute to in a pre-tax fashion is the maximum amounts into 401ks or even a SEP IRA, which allows you to put even more money in there. But there's actually plans out there that allow you to put up to $230,000 per individual. So for a husband and spouse scenario, you can actually defer up to $460,000 on an annualized basis. And that's something that the paperwork does need to be done before the end of the year. And something that if you're not incorporated, you can check in with your attorney, somebody like Ian, to make sure you get the incorporation paperwork set up ahead of time.
Yeah, that's what I wanted to mention because this is more related to business owners, which are husband and wife. They can definitely do something like a defined benefit plan, as Gabriel mentioned.
All good advice. Do we want to talk a little bit about qualified business income, gentlemen? Would that be a natural transition out of this?
This was part of the TCJA Act in 2018, where a business owner gets a qualified business income deduction for up to 20% of the income that they generate from the business. So let's say if somebody is generating 100K of income, they would get $20,000 of qualified business income deduction. So they would pay taxes on $80,000 of income. There are various exceptions for that. One being that if you are a specified service business, i.e., a doctor, a financial advisor, a lawyer, an accountant, then that benefit starts phasing at a taxable income of $315,000. So then the qualified business income deduction starts reducing. So one of the strategy is to try to reduce your taxable income to $315,000 by using things like a defined benefit plan, where you can contribute an amount into this plan, thereby your taxable income is going to be under $315,000.
Well, there's certainly a lot to think about for a business owner, and that's why I think it's super important to have the opportunity to have a team like the three of you assembled, because it gives business owners an idea of what to look for and who they need on their team. As we exit 2020 and we look forward to 2021, what should we be thinking about for the business owner?
I would suggest two things. One is people usually wait till January to start working on their goals for next year and projected financials for next year. I would suggest start doing it in December. That way you can have a game plan ready starting January. That what are you thinking about next year? Also, I would suggest creating a worst case scenario, because every time when we sit with our clients about discussion for next year, they'll say, okay, I'm going to grow by 10% or 15%. Think about a worst case where assume that your income is going to go down by 15%. And can you sustain all the expenses that you were planning for? The second thing that's key for this year specifically is a lot of businesses are going to have a taxable loss. If you are in that scenario, you should think about amending your return from 2018, 2019, because you can take the net operating losses from this year and apply it towards those 3 years. And that would give you an instant refund from IRS.
Wow, that sounds like a good suggestions. Gabriel, any closing thoughts or additions to what Sachin just added there?
I think I would just like to emphasize how important it is at this time of the year to work with your accountant. There's a lot of strategies that are in play that need to be implemented before the end of the year that could save you a lot of money on taxes. So tax planning really comes down to making adjustments in December, and having a really good accountant team is really critical to being able to maximize not just the income for your business, but also maximize your personal situation to make sure that you're minimizing the amount of tax liability you're paying as an individual.
Excellent. Ian, any closing thoughts?
Yeah, we live in a city that is filled with businesses that were built by baby boomers, and a lot of them may not have a defined succession plan. If you're one of those people that owns a business like that and you don't have it written down on paper, what's going to happen if something happens to you, that's a problem. So 2021, there's no better time than now in a pandemic to get that fixed.
I would agree. Sachin, any closing thoughts for us?
Yeah, I would agree with what Ian and Gabriel has said, that, work with your advisors. This is the time to work on any open items for this year, tie it up, and then that when you move forward in 2021, you have everything planned for.
Well, I would agree with all of you that the smartest thing to do is to get yourself a team like the three of you. Thank you so much for your expertise. I thank you for what you do for the community, both the community in which we live and the business community too. So thank you, and we'll see you next time on Business Connection. If you're interested in a television appearance on Business Connection as a way to reach out to your community or to gain exposure for your company, contact NCTV 17 at info@nctv17.com. I'm Liz Spencer, and thank you for watching Business Connection.